Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you Thursday, October the 29th. The year's 2020. Let's talk trading. The reality of trading, cold hard truths, part 4. Um, I alluded to skills, I guess, in the past two videos, and I spoke a little about skills yesterday. So I think I need to get on and really get down to the skills that traders should have. But of course, you have to keep in mind that these videos are for educational purposes only, and your results may differ from mine. So, skills. Let's just set this up. Let's just say you have the best, fastest, biggest supercomputer, you've got the best information, and you've got the most profitable strategy in the world. Once you enter the trade, all of that goes bye-bye. Now, I want you to think about that, ponder that just for a few seconds. Once you enter the trade, all of that goes bye-bye. So, what skill do you need now once you enter the trade? Well, you have to be able to make decisions in a split second. Do I take the profit? Don't I take the profit? You have to have the ability to follow your plan. And the skill that requires is you have to basically manage your emotions, manage your brain. We talk about that a lot because, see, once you put the trade on, there's nothing left to analyze really. You can sit there and read the chart and say, well, because of this pattern, this candlestick pattern, or this formation, or this horizontal line, or whatever, price should do this. But there are no shoulds. Price is going to do what price is going to do. You can't make it do anything. That's a cold hard truth. Okay, you can't make price do anything. So the skill is staying within your parameters that you've set up beforehand. And one of those parameters is your stop loss. You have to be able to override your emotions when it comes time to stop out, especially if you don't put that stop in with a hard stop. You're doing a mental stop. Well, if it gets to here, I'm going to exit the trade. One of those kind of stops. Because if you think, well, you know what, if I take this, it might reverse. If I stop out, it could reverse, and then I'm going to be all upset. Well, you see, you're not trading upset. You're trading on price. You're trying to make money here, you know? And that's part of the problem is that many times, and I'm guilty of it more times than not, that I manage my emotions more than I manage the trade. Because what'll happen? It'll go up and I could have a couple of pips and I'm thinking, oh, let's watch it go up higher. I can make some more because that's what happened the last couple of times. I got out too early. And then all of a sudden, the next thing you know, you're thinking, shoot, I should have taken the 2 pips when I had the chance. And it's all that self-talk. That's the brain management. That's what's getting to you, is how you're talking to yourself. So how should you talk to yourself? It's probably a question. Well, you see, that's up to you. I can't really tell you how you should talk to you. What I can think is it's like, well, based on what I've seen before, based on what I've experienced or based on what my research and analysis told me, if I don't stop out, chances are it's going to go to this position. So for example, right now the pound is in the 30s, 29.33 on the bid. Okay. It already, I think it hit the 20, and I know it's in the rat zone. So what's my thinking? It's like, well, by the end of the day, it should be out of that rat zone. But you see, the rat zone's dynamic. It can make a lower low. So maybe the 30 would be out of the rat zone because it went all the way down to the double O. I don't know. I know if it gets to the 40, chances are it's going to launch up to the 60. That's what the charts, what it keeps doing on the charts. So that's my belief. And as I'm talking, I'm looking here off to the side, it's at 31. So you have to talk to yourself in basically non-emotional language. And you just watch the chart that way with that non-emotional. And it's really hard because emotions do play a part in trading. So you can see here where price is, and you go, well, it exited here. What else do I look at? I go, well, it's got 21 pip range so far this hour. And this big bar here, well, I call that a return bar. And I'm believing price should return to this level based on past experience. So as I watch this trade unfold, I'm just sitting here thinking, okay, it's 4 pips, right? 4 pips off the low. The smart rat's in the 4 percentile. This number should get to 20 or higher. So I'm going to sit here. I'm going to think, now here's a holo trade. I'm looking at M5. I could take a long position at 41 based on the holo. We've got 10 minutes left in the hour. But on the hourly chart, as we see, we just now have turned. Now, anything could happen in these last 10 minutes. We had news at the half hour, which was good for the dollar. But if it's good for the dollar, we know that usually price goes the other way. That's just based on experience. If for some strange reason, that's what they've been doing recently. I don't know why. I don't know why. So we can flip back over here. You see we've got a 1 ball on the top, and what we usually do is we look here, we see this big huge candle. It came back, tested the lowest open here. Now Walmart likes to short. He likes to see that. He likes to take some short trades there. I don't usually do that. I usually don't like shorting in the rat zone, but you see if the rat zone also happens to be in the lower wick zone, well then that's different. Okay, that was the, let's see, let's find the wick zone. No, where is the wick zone? Buy zone. Here's the wick zone. So you see here, I'd want to short out of it. I don't like, if you're going to go short the wick zone, you want to short up here. I usually don't like taking shorts. I like to look for the longs. And even though this is H1, we can change the time frame if you'd like to see what it say looks like on a 5-minute. I mean, sure, we've got you could take a short here. This bar closed, an up bar, or bull bar, bear bar closed. You could short here at the low. That would have made money in the wick zone. All the time being, you're also in the green rat zone. So if you're wondering, well, which way do I trade? Well, are you trading the rat? Are you trading the rat zone? If you're trading the rat zone, trade the rat zone. If you're trading the wick zone, trade the wick zone. So the thing is, if the rat zone's in the wick zone, now it's really interesting. Think about it. If the rat zone's in the wick zone, or actually, it's really interesting. So you can see here between basically 30 and 50, what we have is we've got the rat zone, and right here between 16 and 83, we've got the lower wick zone. So you can see the rat zone's contained within it. And so, as you can see, Walmall could have picked up a pip or two, taking his short there at the holo. Right there, you can see, but it's coming back the other way. So you see that what you have to do skill-wise is talk to yourself in these non-emotional terms, not thinking, not hoping, and just basically, describing what you see on the chart, how you see it. So you can see here, well, it's making lower highs. It just made a lower low. So price must be going down. We can see that each one candle color is red. Now it just switched back to green. And then you can also see how this box is starting to form right here. This is what we call a box. You see how it formed right here. So chances are we've had a 2-ball here, a 2-ball here. If price breaks this level, it's off to the moon. Okay? Could be, at least it could be off to 50 or 60. So that's how I would analyze this. That's how I would talk to myself about this. Not thinking, hoping it goes up, or dang it, it's not going up. Even though sometimes when I'm in a trade, it's kind of like watching a game or a horse race. Like, come on, come on, come on. But I mean, really, you can yell at the screen and cheer all you want. It's not going to affect the outcome. So it's better just to have some cold, you know, distance, detached type of comments as you look at the screen. Say what price is doing rather as opposed to what you want price to do. Okay. And sometimes it's not easy because you see here, you got this big return bar. So it wouldn't surprise me if price came back down to here. So looking at that, depending on where I'm in at the trade, I might go, okay, well, price will maybe come down to here, or maybe it'll come down to at least here because that was a previous dynamic support area. And you see here, we've got these other ones that it came back down off a 3-ball. It made a 1-ball, came back, made a 2-ball. It's making a 1-ball. So look for price to reverse off of a 1-ball, possibly a 2-ball. Now, what did I just say? I said price might come to this level. And then first I said price might come to where? This level. See, that's detached analysis in real time what price is doing. So, and if Walmart took that short, he's happy right now. So, fellow traders, I hope the skill of being able to observe what price is doing, speak about it, talk to yourself in non-emotional terms will help you when you're in a trade. Because see, once again, once you're in that trade, everything you did up to that moment goes off to the side. Now you have to analyze and say what you want to do at this level. Okay? What you want to do here. So for example, I would want to take a long trade if it breaks. Say what level is this? If price gets up to about 37, I would want to go long unless this candle closes lower, and then I would want to go long right about 34, 35. So, fellow traders, just remember, it's not what you trade, it's how you trade it. So get out there and drain the banks. And if this is your first time here, welcome aboard. Click subscribe, click like, share the video all over the internet. This is the Rumpled One, over and out.